start with the question on interest rates and what you see happening in May with the MPC meeting.
Well, I think it's going to be a very carefully balanced decision. I think you can probably make a strong argument either way for a rate cut or no rate cut. We're going for no cut because we don't believe that there's been sufficient currency strength and a sufficient reason to change the inflation outlook since the last MPC meeting. But that doesn't really mean that things can't change between now and the May meeting. You know, we could suddenly see very significant currency strength. The trade-weighted rand is probably around about 15% stronger on the year at the moment. It was 30% stronger on the year at the last MPC meeting. So the Reserve Bank said they did take into account the currency strength on their inflation outlook.
And between the two MPC meetings to the 25th of March, it rallied 6% between the specific meetings.
Yes, and it's a lot less now, obviously, between where it is today and the last meeting. And also as well, the Reserve Bank said that it did bear in mind the fact that the consumer was very fragile, and that was the key reason to cut. So I think, you know, as I said, it's a very close call. We are thinking at the moment probably no cut. But if we see some significant data coming out before the meeting, we'll change our mind. You know, it's a difficult one to make because the Reserve Bank themselves don't really know what they're going to do today. You know, it's a hard call to make ahead of time.
I will be speaking to South African Reserve Bank Governor Jill Marcus. That will be taking place tomorrow, 9 p.m. Central African time on Captains of Industry. So certainly diarise that show. Royce, you wanted to ask Annabel a question?
No, it's just regarding the debt levels. Annabel, I mean, we've seen what's happening in Greece. Concerns about debt. In the South African market, if you look at the debt figures for our economy, they're not by any means alarming. They're no, very, very well contained.
Well below 40%.
But if you had to add back all the parastatal debt, we've seen these Eskom borrowings, the loans they're trying to raise and will need to raise in the future. Does that change the debt levels materially?
It does change the debt levels. It certainly wouldn't put us in the category of Greece or any of those countries that are above 100%. But we're, you know, well below 40% at the moment. And in terms of our international borrowings, even well below that. And if you were to add the parastatal debt and you know, rise toward the 50% mark, you go above the 50% mark. But it's nothing catastrophic. And to be very honest, you know, the parastatal debt is, I suppose, almost longer term borrowing for capital infrastructure. So it's less of a worry than deficits, fiscal deficits, which partly are being used to actually fund short-term spend because of the recessionary impact, you know, which we are in. So there is a different type of debt, you know, and I wouldn't actually really classify the two together and say, adding it up, we become closer to the problem countries. So I don't think that's an issue.
Ashraf?
Okay. Annabel, the other big concern that I have is the increasing unemployment. We're seeing big layoffs from the mining companies, our exporting industry. We'll start seeing layoffs, and then there's no employment coming through from industrial companies. In fact, a lot of them are sitting on cash and not deploying it at this point. Is that not another motivator for keeping interest rates low for an extended period and even cutting further?
You know, I think that's a very key point. You know, we have got a GDP growth figure this year of 2.7%. We've got a household consumption spend figure of 2.3%. We're probably on the low end of the consensus, and it's because we don't see massive recovery in the consumer because of the fact that we have these very high unemployment levels. You know, if you look at the fact that we've lost about 1 million jobs in the last recession, that was the number of jobs we created in the last boom. So we've actually wiped out everything that we've created, and the consumer is really lagging behind. I think that, you know, some of the industries that you mentioned, perhaps also to add the construction industry as well, that those are lagging indicators of what the economy is doing, you know. So you would expect to see perhaps further job losses, even the risk of some companies that are hanging on by their fingernails perhaps closing. So there is that big concern. We saw the residential and the building stat figures in general come out today, and they weren't terribly fantastic. You know, they continued on a pretty negative trend. There was a slight glimmer of hope in the residential sector, but really we are not seeing the consumer staging any major recovery this year. I think the big concern with the unemployment figures is that most of the jobs that were created in the last report, there was a very small net creation of employment, were very low paid, poor quality jobs in the informal sector. And that's really where we're running at the moment. I think as we lead up to the World Cup, you'll probably see similar job creation, but you're not really looking for, and this is a key point that you mentioned earlier, creation of skilled jobs, higher income jobs, and those typically would be in your manufacturing sectors, your export-orientated sector, and that's a big worry for South Africa with the currency strength, and should it actually go stronger. And we can talk about my views on the currency and why I think perhaps it might not do so this year later on. Then that is a big worry, because if you're going to be losing high-paid skilled jobs, that has a negative impact on consumer spending, and if those people can regain jobs in the services sector, they tend to be your lower-paid jobs such as cashiers and shopkeepers.
Let's talk about your view on the South African rand and why you think it may not necessarily go stronger from these levels.
Well, I think it's a really interesting point. You know, we saw the rand at trying to get to 720, I think getting to 722 at the very best. And it was pretty obvious that there was some intervention in the currency at that level. You know, the traders were saying that if the rand goes through 720, we'd be looking at 690. And obviously that has implications for the euro and implications for our export sector and unemployment. And I really do believe that there was very strong Reserve Bank activity in the market. You know, we certainly saw the reserve figures rise quite significantly in the last round. In particular, it's quite easy for the Reserve Bank to intervene, because all that they really need is increased deposits from government to actually wipe out the increase of money supply. If they are selling rands and buying dollars, obviously the currency is going to go weaker, but those rands need to come from somewhere, and those will come from increased government deposits at the Reserve Bank. And in turn, government can raise that cash by issuing treasury bills, longer term dated debt. Given that our budget figures are actually improving so much, we're looking at a deficit perhaps of 6.8 this year instead of the original 7.3%. Government, I think, has a lot more ammunition at the moment, and I think that really is going into keeping the currency fairly stable, if not a bit weaker. In particular,
when you say if not a bit weaker, what do you mean, level-wise?
Well, in particular, when we actually saw the rand trying to go to 720, and then it almost halted. And for a couple of weeks, I think for about 3 weeks, I believe we had severe Reserve Bank activity, selling the rand and buying hard currency. And I think from that point of view, you actually saw the rand halt, and then you actually saw it reverse and go a bit weaker to the levels it is now. And I would attribute most of that to SARB operations.
Royce, you're not looking at a weaker rand, though.
Robin, the rand, it's from a valuation perspective, according to our models, is on the wrong side of the valuation. It's expensive, but for all the right reasons. Commodity prices are doing well. You've seen the gold price, platinum price. And again, interest rates are low globally. South Africa does look attractive. But the rand, you know, going forward, the valuation has to provide an underpin. Now, if you get into the levels of, say, 6 to the rand, to the dollar, you're then in areas you haven't been to before. So you're pushing new extremes in terms of valuations. Now, it can happen, but one just has to be cautious. If you're at those levels, below 7 to the dollar, you know, you break in historic trends, and the rand will never be as expensive then as it would be against the dollar on a PPP, on purchasing power parity basis. So when constructing a portfolio or looking at interest rates going forward, one has to bear in mind the valuation of the currencies. And similar arguments can be put forward for the Australian dollar in terms of their valuation. So ultimately, one has to look at interest rates from a valuation perspective. And when you get to these levels, just be cautious if they are overvalued, that there can be a significant unwind if circumstances change.
And also the Reserve Bank can almost self-limit this exercise as well. If they're the ones who are influencing the value of the currency, in a way it's almost self-determinant for the next interest rate move as well.
Mm-hmm. Just let's focus on that interest rate move, because a number of commentators that I've spoken to feel that there's a lack of clarity, and this is certainly a question that I'm going to put to the South African Reserve Bank Governor tomorrow evening, that there's a lack of clarity on where interest rates are going and that it's unnecessary. Why do people have to guess in terms of whether interest rates are going up or down? Why can't we just have a very measured monetary policy and know what next move is going to be? Is there...
I suppose the answer to that question is that's because the Reserve Bank doesn't really know what all the other economic indicators are going to do for the rest of the year. You know, we can't, for example, say...
So you can't blame them for the lack of clarity?
Well, they cannot foretell with perfect foresight what's going to happen with the entire gamut of economic indicators for the rest of the year, whether it's commodity prices, oil prices...
I'm talking about the March 25th decision. I'm talking about the fact that 22 economists were polled. 19 of them called it wrong. I know you called it right. But why that lack of clarity?
The governor's response was they shouldn't have got it wrong. They should have seen the fact that the consumer was weak. They should have seen the fact that the consumer was very fragile and the currency was strong, and they should have actually been able to tell that the rand was going to be cut. That is her response, and you'll be speaking to her tomorrow, and you can actually ask her.
I will certainly put it to her and see what happens on that front.
That is her response.